Good afternoon and welcome to the marketplace. Coming up in this bulletin, National Communications Authority has served Multi-Choice Ghana Limited with a notice of its intention to suspend the company's subscription management services. Also coming up, government statistician downplays impact of 1 cedi levy on fuel on inflation.
You impose a 1 Ghana cedi. There are immediate direct impacts, and then there are some indirect impacts. So all the things being equal, the immediate direct impact is that fuel prices at the pump will increase by the full extent of how much you have imposed on it.
Also coming up, Ghana's export to U.S. markets will attract 15% tax from today as President Donald Trump's new tariff hikes takes off. Also, Tullow Oil posts $61 million loss after tax for the first half of 2025. These and more coming up in this bulletin. Now let's bring you an update on how the Ghana cedi is faring against major global currencies. My name is Winston Taki, and now to our first business story. The National Communications Authority, NCA, has served Multi-Choice Ghana Limited with a notice of its intention to suspend the company's subscription management service for a satellite television broadcasting authorization pursuant to Section 13 of the Electronic Communications Act 2008, Act 775. According to the regulator, this regulatory action is subsequent upon the company's pricing model, which is deemed inimical to the public interest. Now let's go to the statement where we get to see what the NCA has said concerning the extension. Now, it appears that by this notice, Multi-Choice Ghana has 30 days within which the company may present its views or provide remedial action and submit a written statement of its objections to the suspension of the authorization issued by the National Communications Authority. So they have until 30 days to decide basically whether they will comply with the directive by the NCA given during the minister's presentation. Now, away from that, the government statistician, Dr. Al-Hassan Idrisu, is downplaying the impact of the 1 cedi levy on fuel, pushing inflation levels up in the coming month. Government in July this year started charging 1 cedi levy on some petroleum products. There are fears that this could reverse recent decline in inflation in the coming month. But speaking at a news conference to announce the July inflation, government statistician maintained that it's early days yet.
To answer this question, you have to look at the transmission mechanisms. And you have to look at it in terms of short-term impact and then medium to long-term impact. Because if you concentrate just on the short-term impact, you will not appreciate the anticipated impacts and then the essence of all of these. And I keep saying, all other things being equal. In other words, you have to hold every factor constant. Otherwise, when you increase the fuel prices by 1 Ghana cedi and something else changes, like exchange rate appreciates, it may neutralize it and you will not be able to do the analysis. So you can start by assuming that if everything else is staying the same, and then you impose a 1 Ghana cedi, there are immediate direct impacts, and then there are some indirect impacts. So all the things being equal, the immediate direct impact is that fuel prices at the pump will increase by the full extent of how much you have imposed on it. That's the immediate direct impact. And then indirectly, if, for example, the fuel is serving as input into other items, like transportation, etc., and the 1 Ghana is significant, it may also impact those other services as well. Also, if, for example, the transportation affects distribution costs, it may also impact it. But it all depends on what? Magnitudes. Now, the reason I said you have to answer this question from a short-term, a medium-term to long-term perspective is that if you look at it from only that angle, you may not appreciate the total impact.
Government statistician Dr. Alhassan Idrisu says the central bank's decision to reduce the policy rate is unlikely to influence inflation figures in the immediate term. According to him, the factors driving inflation are largely external and structural. The following report has more. Government statistician Dr. Idrisu, speaking to Joy Business, stressed that while interest rate adjustments are important tools, inflation outcomes depend more on supply-side dynamics, including food production, global oil prices, and exchange rate stability. He described the central bank's decision to cut the policy rate as a step in the right direction.
Well, first of all, I mean, with just seeing that the monetary policy rate has reduced from 28% to 25%, even the reduction in response to the trends we are seeing in inflation is a positive news. So we don't have to worry. I mean, so it's positive. Because usually, central bank has a mandate to ensure price stability. That's one of their strongest mandates. But price stability is not on its own. Price stability is together with a number of objectives that government is pursuing to ensure that you and I, our living conditions are better, including ensuring that the economy grows, ensuring that we have jobs, right, ensuring that there's food security, etc., etc. So these are development goals that the country is pursuing.
He further explained that while monetary policy helps shape economic expectations, it will take time and complementary measures for inflation figures to reflect the impact.
So central bank would usually look at a number of factors, and based on that, they make a decision. So I want to believe strongly that they've observed inflation for some time, and then they responded by bringing the policy rate down. Some think that the rate should have come even much lower than what. But you see, the central bank observes a number of factors. They don't look at only inflation. So based on the risks that they see, then this decision is made. So I would say that this is a good start. Let's see how things go going forward, and then we'll be able to see how it also impacts on the economy and then on the people.
Food inflation declined by 1.2 percentage points to 15.1% in July 2025. Prices of food items increased by 0.6% between June and July 2025. Non-food inflation dropped by 1.9 percentage points to 9.5%, but price level of non-food items increased by 0.7% between June and July 2025. Moving on, export from Ghana to the U.S. market will from today attract 15% as tariffs. This is because the revised tariffs hike for countries around the world that export to the U.S. market kicks in from today. The tariff affects African countries including Ghana, Nigeria, Zimbabwe, Zambia, Uganda, Mozambique, Mauritius, Malawi, Lesotho, and Madagascar. By this, Ghanaian goods entering the U.S. will be subject to a 15% duty, raising export costs significantly. In other development, Tullow Oil has announced that it has recorded a loss after tax for its financial year, and this has been an interesting development. We'll go to the screens to assess the key figures that are recorded in the first half of the year. Now, Tullow Oil's half-year financial report, the revenue reached $524 million compared to $759 million in the same period of 2024. The loss after tax hit $61 million compared to $196 million in the same period of 2024. So the turnaround strategies and Ghana's operations in the first half of 2025 has been seen significant progress towards realizing priorities for 2025. This is the plan of the company. Now, new MOU with Government of Ghana, which has to do with Exploco, most of the exploration companies who have come together to ensure that they increase their outlook in the rest of the year. There's also fresh oil drillings in Ghana. Already, Tullow has expressed investment of $20 billion in the coming years, and this is to show that in the 2026, the plan is to expand the operations in Ghana due to the license that has been extended by the government and the Tullow Corporation as well. There's also a plan of securing a favorable ruling on tax dispute with Ghana, and this also came to light with expecting about $230 million that was initially agreed after GRA brought concerns about remittance disputes, but it appeared Tullow won the case, and that goes well to favor the operations. And this is a development, according to Tullow, that came up in their financials quite recently. Now, very interesting also moving to the Bank of Ghana to know what is happening there. The governor of the Bank of Ghana, Dr. Johnson Isiama, has underscored the urgent need to secure Ghana's monetary future in the face of rapid digital transformation. Delivering the inaugural address of the Bank of Ghana Chair in Finance and Economics at the University of Ghana, Dr. Isiama noted that Africa's monetary policy must evolve beyond traditional systems to embrace innovations such as digital currencies and fintech solutions. Address of the Bank of Ghana Chair in Finance and Economics was held under the theme "From Cowries to Crypto, the Long Arc of Monetary Policy in Africa." The Governor of the Bank of Ghana, Dr. Johnson Isiama, highlighted the importance of safeguarding Ghana's monetary future amidst the rapidly evolving digital evolution.
Our job as regulators, as academics, and as citizens is to shape that evolution with wisdom, and to ensure that innovation serves inclusion, that digital tools expand opportunity, and that the Ghana cedi, whether in coin, note, or code, remains a symbol of national confidence and continuity. Colleagues, let us honor our past by securing our monetary future, and we do this together.
Vice Chancellor of the University of Ghana, Professor Nana Abapia Amfo, welcomed the partnership between academia and industry, describing it as a vital step in strengthening Ghana's policy framework through evidence-based research.
This initiative aims to establish a link between rigorous academic investigation and policy making that actively promotes industry growth, job creation, and widespread development. In accordance with the terms of our collaboration, the Chair shall conduct research in the areas of financial intermediation, monetary and fiscal policy, and financial regulation. Additionally, it will commission studies directly pertinent to Ghana's evolving needs and opportunities.
Professor Yagandi Imote Paul Alagidede was officially introduced as the Bank of Ghana Chair in Finance and Economics.
Africa's first fully resource-backed central bank digital currency, beginning with gold and cocoa and expanding to include solar, share nut, our manganese, diamonds, and other verified land values, could be a starting point. We need to also establish institutions that will practicalize these ideals, with the University of Ghana as a global beacon for quantum monetary design, where meta-economists code with farmers and central banks learn from cooperatives. Nabia Capital is more than a project. It is a paradigm shift. It reminds us that when value is born of the people, governed by logic rooted in land, and backed by tools that speak our Kasam, Kiswahili, Ewe, Zulu, sovereignty is not a dream. It is a design choice.
This prestigious milestone marks a new chapter in the collaboration between the Bank of Ghana and the University of Ghana, reaffirming their joint commitment to advancing research, education, and policy development in the fields of economics and finance. ARB Apex Bank PLC has maintained a strong financial performance for the 2024 fiscal year, recording a profit before tax of 25.44 million cedis. The bank clocked growth across key indicators, including a 37.3% increase in capital, an 83.87% rise in total assets, and a 73.66% surge in deposits. This marks a steady recovery from the adverse impact of the domestic debt exchange program that began in 2022. Clinton Yeboah was at the 23rd annual general meeting of the ARB Apex Bank and filed this report.
The banking sector is bouncing back in the aftermath of an economic downturn experienced in 2022 with the rollout of the domestic debt exchange program under the previous administration. The sector demonstrated significant growth in key financial indicators during 2024. Rural banks made remarkable breakthroughs in digital banking with the adoption of online banking that greatly enhanced convenience and accessibility for rural customers. At the 23rd annual general meeting of the ARB Apex Bank, the manifestation of this growth was tabled for the year 2024. Despite the dynamic and challenging macroeconomic climate, the bank's total assets recorded significant growth of 83.87% from 1.2 billion cedis in 2023 to 2.28 billion cedis in 2024. Chairman of ARB Apex Bank, Daniel Ohenike Owusu, assures that the bank will continue with all efforts to improve quality service, governance, internal controls, and financial performance.
The ARB Apex Bank supported rural banks to operationalize their digital banking platforms. Customers can now perform a host of banking services such as funds withdrawals, funds transfer, bill payments, accessing account statements, and making check requests right from their mobile phones using the special USSD code. The ARB Apex Bank will continue with all the efforts to improve quality service, governance, internal controls, and financial performance. As part of this effort, the bank will not relent on its engagement with the regulator and relevant government officials to address the apparent operational challenges facing the industry.
Investments at the bank increased by 24.38% from 510.1 million cedis in 2023 to 634.5 million cedis in 2024, while loans and advances recorded a higher growth of 104.87%. Managing Director of ARB Apex Bank, Alex Kwesiewa, lauded internal and stakeholder strategies that have secured the bank's elite performance.
Our exceptional financial performance this year, as 2024, is a testament to the efficacy of the strategies we have implemented over the past 3 years, marking a significant consistent improvement in the performance of the bank. This year's performance is following the significant effects of the domestic debt exchange program since 2022.